Joining me right now is Cornerstone Macro co-founder and chief economist Nancy Lazare. Nancy, it's great to see you.
Good morning.
Thanks so much for joining us. You've been pretty bullish on this market, and you've been seeing, even through some of these, upsets or trippings in China and other things. How do you feel about today's news? Is this a big deal for markets?
It is. Some of it's already been discounted. There are really three big headwinds to the global economy markets as we move into the fourth quarter. Basically, Powell, Xi, and the trade battle. Now all those things have faded. The underlying trend in U.S. economic activity is really healthy. Companies have done a great job, particularly domestic in controlling costs. Profits, domestic profits, which I have to emphasize, domestic profits are actually increasing about 10%.
And one of the things that you look at is business spending, CapEx.
Yeah.
Tell me where that stands, because for a little while it really slowed down from the activity we saw right when the tax cut plan was announced.
Yeah. Back in 2015-16, we had a headwind to U.S. capital spending, manufacturing activity. But then as you went into 17-18, confidence that China wasn't going to have a recession, and then the tax cuts, we started to see a ramp up again in capital spending, led by both technology, software equipment, and plain old industrials. That we think is going to continue. The growth rate's not going to accelerate here in 2019, but CapEx is so important. There's too much focus on the U.S. consumer and not enough focus on companies are reinvesting in this country, which is creating jobs.
But do you think they are reinvesting?
Absolutely. Yeah. I mean, you have to take a step back and plow through the noise. Buybacks are up, sure, but so is CapEx, and the tax incentive is going to continue to support it.
Yeah, you make a really good point, because it's not just, building buildings and things like that, but it's also putting money into technology.
Absolutely.
And there's been a huge move in that in terms of CapEx. Look, on the China story, South Carolina Senator Lindsey Graham joined me yesterday on Sunday Morning Futures, and here's what he said about the trade relationship with China. Scary. Watch this. I feel like China believes that they were number one, they were this dominant force thousands of years ago, and they want their rightful place again, and perhaps don't care how they get there, whether it's stealing other people's ideas or not.
Well, their economy has had about a 30-something% hit because Trump has stood up to them.
That's true.
They sell us a lot more than we buy from them. We want a better balance of trade, but what we want to do is stop business practices that cheat us out of market share.
I just wonder if we're going to be able to do that. I mean, it's not just about China buying more stuff from the United States.
Yeah. China is rebalancing its economy. It's been doing it really since 2010 and 11, and it's moving, quite frankly, in the right direction. But it's been such a big driver of growth. When they do take global growth, when they do take a step back, it echoes around the world. And so it will continue off and on to be a headwind. But net, I'm impressed with the deleveraging campaign that they've had, and now the more willingness to start to recapitalize their banking system. Yes, China will continue to be pluses and minuses for global growth. Right now, I think it's going to be more a plus for the global economy. They've eased massively. They've cut rates. They've lowered the currency, although recently it's moved back up, and they've put in place massive fiscal stimulus. So I think going forward here in 19 and into 20, China will net be more of a support for global growth. They've kind of gotten their ducks in order, ready for this trade battle.
Well, the global growth story may very well need it, because here we're looking at a real weak spot. There's a survey by the National Association for Business Economics finding that 42% believe a recession will happen in 2020, largely because what are you seeing in Europe? 1% growth. You're seeing China slow down a bit. How much is that a concern for you as you look at the macro backdrop?
So to be sure, what's going on in Europe is an incremental headwind to the economy, but some of that is also due to China. Germany in particular is a huge trade with China, and so if China does pick up, our story has been and continues to be, you will see kind of a lift to global growth, particularly those countries from Germany to Japan that have been hit by the sharp slowdown we saw in the Chinese economy. So Europe has slowed. I think it gets a little bit better here in 2019. This is not 2011 and 12 where the ECB raised rates. Oil was going through the roof, and you had a double dip in the Eurozone. Soft spot, yes. Recession, no.
All right, so you want to stay with cyclicals here. How do you allocate capital in this environment, given that you do still find the backdrop supportive for stocks?
There's still a huge uncertainty about the direction of the global economy, and until people start to calm down about the global growth outlook. Again, I'm going to let you handle the stock market, but because expectations are still so low on global growth, worries about China, worries about Europe, worries about Japan, that I think there is still room for financial assets to continue to do well.
All right, we will leave it there. Nancy, it's great to have you on the program.
Thanks very much.
Thank you so much. Nancy Lazare, Cornerstone Macro.